What's up, deal makers? Welcome to another stock analysis video on the Dealmaker channel. So I research and analyze companies so you can make more informed decisions, not based on hype. So let's dive in. Right, so in this video, we're going to talk about Tesla, the electric vehicle manufacturer that is taking the world by storm. And Tesla has actually gone up in price since last year. It was one of the best performing stocks in 2020. So after it has gone up so much, I think depending on when you bought it, you may have gone up by 500, 600, 700% on your Tesla investment. So in 2021, is it worth it to buy a Tesla stock or is it already too high a price? So that's what we're going to find out in this stock analysis video. If you like these kinds of videos, please make sure to smash the like button for the YouTube algorithm. That helps YouTube share this to more people, and that helps build the channel up as well. So I always start my analysis with looking at the business model. And the business model of Tesla is very interesting because Tesla is building an energy ecosystem centered on electric vehicles, solar energy, and batteries. So Tesla manufactures sedans, SUVs, their cool Cybertruck, and their big rigs, or what they call the Tesla Semi. This is for commercial trucking. So Tesla manufactures a full line of electric vehicle models. In addition to that, Tesla also manufactures solar panels. And the way that they approach this is they create solar roofing panels. So instead of putting your solar panels on top of your roof, they replace the actual roof so that you only have to spend once for your solar panel needs. Energy collected in the solar panels are collected in the Tesla Powerwall. So this is the battery that Tesla supplies for residential customers. And for commercial installations, they have the Tesla Megapack. And finally, Tesla also builds charge points, or what they call the Tesla Supercharger Network. So this relieves the Tesla owner of any anxiety of his battery running out of charge if he is out on a long drive. So this is the Tesla business model or the Tesla ecosystem. So they're a lot like Apple. They create an ecosystem where all of their products tightly interconnect with each other. So Tesla produces vehicles, cars, SUVs, uh, pickup trucks, and semi trucks. Then they also build car batteries, although they also partner with other battery manufacturers. They build charge points like the supercharger network, and they build solar energy panels so that you can collect solar energy to charge all of your electric vehicles and your entire house. So Tesla Energy caters to both home installations and commercial installations. The vehicles are sold to individuals and commercial fleets. There are Tesla charge points where Tesla is sold to relieve the Tesla owners of worries the batteries running out. So all of this ecosystem is actually generates a lot of data, and all of that data is being collected under Tesla's network, and that gives Tesla amazing insights, on usage and customer behavior and all that, which allows them actually to adapt their product offering better to their customers. So overall, it is an amazing business model. And the cool thing here is once you start buying a Tesla product, you are more than likely to buy more. It's like the Apple model all over again, just this time applied to cars, electric cars, and solar energy. So how did Tesla perform? So this is Tesla's latest financial statements. No, Tesla had an earnings call last January 27, 2021, and we can see amazing numbers now in this earnings call. Their automotive revenues grew year on year by 46%, where the regulatory credits accounted for 202%. So if you're not familiar with regulatory credits, these are credits that states award to car manufacturers that produce zero emission vehicles. And they can sell these credits to other car manufacturers that still make internal combustion engine vehicles. So Tesla sells these credits to other car manufacturers. So in Q4 of 2020, Tesla had a automotive gross margin of 24.1%. So it was a slight dip from other quarters, but it was a 157 basis point increase from Q4 of last year. Again, total revenues went up by 46%, gross profit went up by 49%, and the GAAP gross margin went up by 39 basis points. Operating expenses also increased. Um, Income from operations increased by 60% as well, and operating margin increased by 49 basis points. So the EBITDA also increased by 57%. Net income increased by 157%, and EPS increased by 118%. The Tesla bulls were awarded for their faith in Tesla. So they actually drove up the price last year, even though they have not yet seen these numbers from Tesla. Net cash grew by 112%, capex grew by 179%, free cash flow grew by 84%, and cash and cash equivalents grew by 209%. So Tesla now has 19 billion in cash to fund their expansion, and to fund their research and development. And it's quite possible they can also use their free cash to acquire other companies to integrate into the Tesla ecosystem. So looking at their full year values, automotive revenues increased by 31%, gross profit up by 58%, total revenues up by 28%, total gross profit up by 63%, gross margin went up by 447 basis points, operating margin up by 660 basis points. This is the first time that Tesla is profitable for the entire year. So the previous years, Tesla was losing money. But for the year 2020, amidst a raging pandemic, Tesla became profitable. So overall, strong, very, very strong performance for 2020 by Tesla. If there's one thing to criticize, it's really their very, very high price to earnings ratio. Right now, they are at a P/E of 1,678. So what that essentially means is for $1 of earnings, investors are paying $1,678. That's not a very good number by any measure. Now the forward P/E is at 151.48. Now this P/E is based on analyst forecast. There's no guarantee that this is going to be the P/E. But the good news here is if Tesla maintains its price now, by next year, the forward P/E their P/E will be around 151.48. So I would think that if Tesla's price does not increase for the next 1 to 2 years, then for me, they would be a good buy already. Mhm. Now, what are the growth drivers for Tesla? Well, very important for Tesla right now to increase their manufacturing capacity. And Elon Musk committed to a capacity growth of 50% every year. So they're going to be very, very busy ramping up their production of their gigafactories. So right now they have factories in Fremont, California and Shanghai, China. And they have under construction is their factory in Berlin, Germany, and another one in Austin, Texas. Tesla has plans to enter India as well, and that's going to be massive for Tesla. That's another 1.2 billion market waiting for them. So in addition to ramping up their manufacturing capacity, Tesla also needs to put full self-driving into Tesla also needs full self-driving to be fully operational. So right now, full self-driving is in beta testing, under beta testing, in select locations and only with select owners. What's full self-driving? Well, that means that the driver can literally take their hands off and let the system drive the car. Of course, by law, they are still not allowed to do that. No, they still have to have their hands on the wheel and eyes on the road. So that is the requirement under law. But who knows, 2 or 3 years from now, regulation can probably be in place for fully autonomous driving. It's just important that Tesla is able to get this started already so that they can continue to build up their data. Right now, Tesla has the largest amount of data in terms of self-driving capabilities. Very important that this data collection continues because this helps the artificial intelligence, this helps the system become better and better in fully autonomous driving. But this is also a source of income for Tesla because right now to get full self-driving activated for a new Tesla buyer, they have to pay an additional $10,000. Now in the future, I expect it to become a subscription-based service, and that will be a source of regular income or recurring income for Tesla. The bigger play here is for the birth of the robo-taxis. And this can potentially replace Uber and put Uber out of business. And finally, Tesla Energy needs to expand their footprint. They need more installations. They need more residential installations and commercial installations. Now, many investors believe that Tesla Energy is actually going to be much bigger than the Tesla EV manufacturing business. Tesla becoming an energy company is what will drive future growth for Tesla. And these are the numbers for Tesla's energy business. So total solar deployed in terms of megawatts, 86 megawatts in the fourth quarter of 2020. That was up 59% from last year. And total storage deployed, so these are the batteries deployed, that's 199%. So those are solid numbers that we can expect more growth from Tesla's energy business. Supercharger networks have also increased massively, the 41% increase in number of stations and 45% in number of supercharger connectors. So those are the three main drivers for growth for Tesla. So they need to increase manufacturing capacity, they need to implement full self-driving and make that another source of income for Tesla, and they need to expand their energy footprint so to fully realize the huge energy business for Tesla. There's a lot of things to like about Tesla. It's one of the most admired companies in the world. And if you like Tesla as much as I do, please smash the like button for the YouTube algorithm. And this helps build up the channel as well, so I can continue making more videos like this. But there are risks that Tesla faces in achieving their growth targets. Number one is the increasing intensity of competition. So in the first half of 2020, Tesla was the undisputed electric vehicle manufacturing leader. So they had 179,000 units produced, while second place, the Renault-Nissan Alliance, is at 65,000 vehicles or units produced. By 2025, there's going to be a lot of players already challenging Tesla. So Nissan Renault is expected to make 3 million cars or 3 million units by 2022. Volkswagen targets 2 to 3 million by 2025. Toyota targets 2 million by 2025. While Tesla was able to deliver 500,000 last year, but at 50% growth every year by 2025, they will be making 3.8 million units if they achieve their growth targets. And they will be challenged mainly by the Nissan Renault alliance. The next risk for Tesla is LiDAR. So LiDAR is a laser-based system for implementing computer vision. Right now, Tesla uh, uses optical cameras for computer vision. So they're not using laser technology or LiDAR for their self-driving capabilities. And the main reason for that is LiDAR is very bulky. It's not cool to look at all that LiDAR equipment in addition to the prohibitive cost of buying LiDAR. But as technology improves, so there's that very real threat that LiDAR equipped vehicles may be more reliable than Tesla vehicles. Elon has been very vehement, has been very resistant in applying LiDAR for Tesla vehicles. I hope that changes in the future when the cost of using LiDAR makes it economically feasible for Tesla. But until then, Elon's refusal to use LiDAR is a risk for Tesla as a company. So is it worth to buy Tesla stock right now? So weighing all of the pros for owning Tesla, all of the risks for owning Tesla, let's go to my Etoro platform and look at the Tesla research tab. So here are the stats for Tesla. As of today, Tesla is already a 796 billion company. Like I said, it has a P&E ratio of 161,678. Let's look at the research. So we can see here the amazing run up in Tesla price since last year. That run has actually prompted many analysts to give mainly a hold rating for Tesla. So more than half of analysts covering Tesla, and there are 27 analysts that cover the company, more than half give Tesla a hold rating, only 26% give them a buy rating, and 19% give a sell rating. Average price target is $625. So the current price is way much more than the median analyst price target. So there's a 25% downside. But the highest estimate is at $1,200. So there are very bullish analysts out there. And I guess that is Alexander Potter of Piper Sandler. So he's one of the most bullish analysts on Tesla. And if you follow that bullish case, then Tesla is still a good buy. What have the hedge funds done? Well, you can also follow hedge fund activity. Hedge funds have been net buyers. So they increased their holdings by 228,000 shares in the last quarter. Who is the biggest buyer? That's Philippe Lafont. He basically doubled his holdings in Tesla, while others have reduced their holdings in Tesla. So in terms of corporate insiders, no insiders have bought shares in Tesla. So there have been sellers, there have been insiders selling, but these are uninformative sells. These are the executives exercising their stock options. So these are normally bonuses given to executives. So looking at the overall view from Wall Street and looking at what we have seen so far in terms of financial performance, their ecosystem, and the risks that the company faces, for me, it's not a good price to buy, or it's not a good time to buy Tesla right now. Although looking at the behavior of the stock, the stock has really been going up. So every dip in Tesla has been bought. Last week, Tesla went below 800. It went up by 5% yesterday. If you want to chase Tesla right now, I mean, feel free to do so. Well, personally, I will be on the sidelines. I'll be looking for other investment opportunities because for me, right now, Tesla is not at a very good price. But don't get me wrong, I believe Tesla is a great company. This is similar to the situation with Shopify where I love the company. I'm sad that I did not get the opportunity to buy into that because I only entered the US market late. But I'm also looking forward to reliving that experience, with other companies. The good thing with the US market is there are a lot of choices out there. There are a lot of opportunities out there. So I'll just continue to look for other companies in the meantime. And this is what I mean by Tesla's P&E being too high for me. Because when I compare that with other big tech companies, Amazon at 93, Microsoft 37, Apple 40, Netflix 87, Tesla's 1,600 P&E ratio is simply too high for me to get into Tesla. So at this point, I'll be on the sidelines with Tesla. I would rather look for other investment opportunities that I feel are more reasonable for the numbers. But don't get me wrong, I love Tesla as a company. And once they can bring down that forward, even at the forward P&E level, right, they can bring it down to the level of at least close to Amazon's, then that will be a sign for me that, hey, now's the time to enter Tesla. I hope I'm not too late. Uh, but like I said, I'm okay with passing on Tesla. Uh, it's time for me to just focus my sights on other companies as well. But for you guys, no, this is not investment advice. I am not a licensed investment advisor. So these are just my opinions as an investor as well. So feel free to make your own decisions, do your own due diligence. I hope that I was able to give you enough information to make an informed investment decision. Next up, I'll be doing analysis on General Motors, McDonald's, and Roku. Roku was requested by one of the viewers, one of the subscribers to the channel, so that will be up next. Stay tuned for these stock analysis videos. So if you like this video, please again make sure to smash the like button for the YouTube algorithm. This helps the channel grow and it encourages me to make more videos like this. If you have any companies that you would like me to analyze for you, feel free to let me know in the comments section below. If you haven't done so, please make sure to hit subscribe and click on the notification bell button so that you'll be notified whenever there are new videos being published to the channel. So it's been my pleasure sharing this Tesla stock analysis video. I hope you learned something and I hope that this video helps you make a better decision in terms of investing in Tesla. Look forward to making more videos like this and I wish that all of your deals will push through. See you in the next video.